Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, a while back, somebody on social media said, yeah, that's great, insinuating that I cherry-picked a trade. Why don't you show me everything you do? And I said, well, I'll tell you what, how about I show you my next 100 trades? And then we did get a trade last week. By we, I mean me, but I also posted it in Facebook, and I'll show you that in just 1 second. Market timing update. Someone asked me, what good is Landry Light? And I don't think they were being mean about it. They were just kind of curious. And I think that if I would take a step back and re-explain it, I think it would make a lot more sense and maybe show you a few little things here that might be able to help you use it. And again, that'll make sense in just 1 second. I want to do a brief update on the TFM 10% system. I did get some questions on that yet again. Housekeeping, I do take requests. It makes my job a lot easier knowing what I'm going to cover ahead of time. If you need to reach me, DaveLandry.com/contact. If you want the slides from this presentation and all the other presentations combined, which have a lot of the rules that I'm sort of constantly asked for, and that'll make sense in just 1 second, go to DaveLandry.com/StockCharts, put your info in, and I'll give you enough stuff to keep you busy for a long, long time. Limited access to the members area, market timing course, all three of my books in PDF format, plus much more. If you do want me to cover something, I can't fit it in this venue, I can usually fit it into my Thursday webinar. Those are every Thursday at 6 o'clock Central Time, 7 o'clock Eastern. It's daylight time right now, at least. And you can go register that at www.davelandry.com/webinar. Would love to have you there if you want to watch live, ask questions live, ask about individual stocks, and all those other good things. As you know, right now, thanks mostly to COVID, these shows aren't live. I record these and then we post them within like a day or two. But if you want to come to a live show, ask about stocks that you like, or see what the other members are looking at, I'd love to have you there, or bring on any other questions you might have. All right, let's talk about my next 100 trades. As I've been saying, they're going to be in zero hindsight. Obviously, by the time they make it to this recorded presentation, they'll probably already be done. But they do come directly from my trading service. If you go to DaveLandry.com/archives, you can take a look at those archives to see that it was not in hindsight. Or if you are a member of my Facebook group, which you do have to be a gold member at least of DaveLandry.com or a service member to have access to that. As I joke, it keeps the riffraff out. But as I also say, I've been in enough groups before, or tried to participate in forums before, and it tends to become a Lord of Flies. And knock on wood, we've got a great group, and we're all looking to trade trends and find setups. And I really, really love the group, if I say so myself. As my wife said a while back, as I repeat often, she said that's the best thing I've ever done. You know, I don't want to digress too far, but as I'm thinking about it, trading could be a really lonely sport. And I'm here by myself all day long, and I get a little lonely and feel like it's only me doing stupid things sometimes and making mistakes and so on and so forth. And if you have other people out there, it really helps. And sometimes that extra pair of eyes can help alert you to something that you may have missed, especially if you're getting really busy with crazy markets like lately. You might miss an IPO or some other stuff because markets, obviously, again, are so crazy. I'm going to show warts and all. Obviously, there's going to be some losers in that. I hope there's not any, but obviously there'll probably be some with 100 trades. So game on. We got our first trade. Here's the post that I put in Facebook group. The buy at B pattern, you buy near the close or at the close if it looks like it's going to close at a new closing high on the 5th day. Now, there's a couple of caveats, and I'll walk you through that. But there's the original post. As you can see, 2:42 Central Time. That's about 18 minutes, or exactly 18 minutes before the close. And I did take this trade. So here's day 1, day 2, and day 3. Now, buy at B, you buy at the 5-day closing high, provided that's also above the day 1 high if that day sets the high for the week. That's not as complicated as it sounds. So you see day 3 sets the high so far for the week, so we no longer have to worry about the day 1 high. So forget about that rule. Now, if these two bars were below this here, the close would also have to be above this high. And that's it. That's a pretty simple rule. Day 4, so now we know we have to close somewhere above that high, because that's the closing high so far. And on day 5, we do. And you can see there is where I got in around the close. Bought 1,000 shares and then flipped out. The next day it was up 2 points and change. And I just felt like it was a gift horse, given the nature of this market. Probably, especially with a little hindsight, with this setup, you probably need 3 or 4 points. In fact, I knew that going in. But 2.5 points or so was plenty, I figured, to take some partial profits and bring my stop up to break even. One thing I was discussing in my Week in Charts webinar, which I was talking about a little while ago, www.davelandry.com/webinar, is I'm going to have to be careful not to try to just put points on the board, so to speak, to make this look good, like all trades profitable. I'm going to also have to make sure I'm following my general plan, and that is to take that short-term profit and then ride out a longer-term trend. In this case, I just felt like it was a gift horse overnight, 2 points and change. Crazy market. I took those half profits. I did try to position myself for a longer-term gain, but I did get stopped out of the remainder for a scratch. So here's the trades right here overnight, $1,000 and change, better than a poke in the eye. Ideally, though, that's not my ultimate goal. My ultimate goal is not to go in for one day on a trade. I want to be in a trade for a long time. And we do have one in the portfolio right now that we've been in for about 1.5 years. That's ARLP. If you go back and look at, I think, last week's show and a couple of shows prior, I showed that setup in those. So here's the spreadsheet. You can see the first loaf, it's 1,000 shares divided into 2 loaves. The swing trade portion and the longer term trend following portion. Obviously, the longer term trend following portion did not pan out. And I said earlier, up 2.5 points by the time I got out. Noticed it was up that much and got out. I was only able to get 2.14 points, but I'm not complaining. So there she is, the first trade. Thank goodness it was a good trade. Now, this question or comment was posted on YouTube. It says, red-green at bottom happens at the same time as the market. How is that an indicator? I appreciate the tutorial, though. So I totally misread this question. I thought he was pointing out the fact that it can be red and green at the same time, which it can, and I'll explain that in just one second. What he's asking instead is that, hey, the market turns the same exact time as an indicator, and how is that an indicator? Well, it doesn't always turn red or green as soon as the market turns, and I'll show you that in just 1 second. But the thing is, as I often say, I like to see indicators as illustrators. They help you to recognize what is already in a chart. I always look at a blank chart first, okay, before I put on any indicators whatsoever. In fact, the only indicator I really use, if you think about it, is a moving average. I use historical volatility to let me know if the stock is volatile enough to trade, but I always look at a chart, again, before plotting any indicators whatsoever. Now, think about this. If an indicator indicated where a market will go next, you would own the world, right? Now, there's people out there that'll be happy to sell you indicators for thousands of dollars. If you want to buy some from me, I'll sell them to you, you know? But the bottom line is they don't indicate anything. They just show you what's already in the chart. Now, if you ask yourself, how does an indicator derive its value? Well, it derives its value from price. So it's a second derivative. So the way I look at it, why not look at price itself, the first derivative, right, or the zero derivative, whatever you call that, and then plot an indicator if you feel so inclined. But I do like the way the proper order, which we'll discuss in 1 second, of the bow ties and the Landry Light can help to really keep you on the right side of the market. Now, with indicators, I would say use them very sparingly, although I do like mine a lot because they're not some mumbo jumbo. They're not some oscillator that's bound, that's going to go low and look like the market is bottomed out when maybe it hasn't, or just the opposite or the top. But mine, again, there really are more like illustrators to show you what's actually in the chart. So use sparingly, and again, they could truly help you to see what is. So let's take a look at Landry Light and answer the question. So notice that, and again, the original question I thought was, how can it be green and red at the same time? Well, good as that. Well, it can't be. It can only be green, it can only be red, or it could also be none. But what's interesting here is he was asking about, well, it flips the same time as the market flips. So one thing you could do is look for a couple of days of Landry Light to help see if a trend is developing. And if you're in a trend, as long as the Landry Light stays green, or at worst, there's just none whatsoever, meaning that the price is intersecting the moving average, like you see here, none, none, none here, because again, the price intersects the moving average, but the highs did not go below. So again, work to stay long as you have Landry Light. Now, in some cases, if you're in a trend for a long time, or if you capture a very, very big move, I would also suggest that you use some form of money management and position management and not rely on an indicator in and of itself to turn. But you can see that, again, we stayed green for a long time, and then we had one little negative bar or red bar, and right here, and then you can see that we went back to being red as the market began to roll back over. If you look at a 200-day moving average, which I don't use that often, but sometimes I like to have maybe a 30,000 foot view, you could see, and again, I'm answering a question that wasn't asked. Can it only be red? Can it be red and green at the same time? And the answer is no. And you could see it was red for a while in here because it was less than the moving average. And then it turned green after none for a little while, okay? And then the market rolled back over. And I'm going to discuss this as it relates to current conditions in just 1 second. But you can see we turned red and the market rolled back over. Had one little kiss of the moving average and went straight back down. And we've been red ever since. Now, what good is it if it's turning red and green? Like I said earlier, maybe wait for so many days of Landry Light, maybe 10 or so, before looking to get long. And you could see it stayed green for a little while, but then it went red. So this could indicate the market is choppy. And if you look at the market itself, which I would recommend you do first anyway, you could see that the market was choppy during this period. And the best thing you could do is take a look at the net price change. And right now, you look at the S&P 500, you look at NASDAQ, you go back about a year, year and a half, and you can see the market hasn't made any forward progress during that period. And if you go back a few weeks, obviously it was much higher, so the net price change is down. And then also, of course, you have Landry Light. But here, you could say, okay, well, I don't really see a trend developing. Looks like it was trying to get going, and then it came back in, and then it tried to go down. And then finally, the ultimate trend turned out to be a downtrend. Now, kind of defending my indicator, what good is it? Well, let's say you were using the 200-day moving average, and again, this is a little bit longer moving average than I would normally use, except that I know that the 200-day moving average is well watched, so I will occasionally plot it, and you'll see these presentations. I'll plot it along with the Landry Light. But you can see from there to there, that was a 58% run in the market. Now, again, you probably don't want to wait for this thing to come all the way down to stop you out. In other words, follow something like this mechanically. So what you would do is you would take some profits along the way and probably have a trailing stop. And then maybe longer term, your trailing stop would look something like a 200-day moving average. Go in and watch prior shows, such as the ones when I talked about CPE and ARLP, which we're still long, by the way, the ARLP that is, where we took partial profits and then we let that stop widen out over time to ride out a long trend. Now, if you take a look at the S&P 500 going back to the pandemic, notice that the first bar Landry Light was right here, meaning that the high is less than the moving average, and we had a pretty serious slide. But notice that because it's a 200-day moving average, that 200-day moving average did not come down very much along with the market, so your signal to the upside is going to be pretty much a scratch from where you get in. So notice that, again, yes, the 200-day moving average barely moved during that time period, but the market did drop 26% from the first day of red. So you start seeing the market, again, look at the net price moving from here down to here, and that's what helped to trigger the TFM 10% system, because the first rule for that is the market has to drop 10% or more away from its 50-week closing high. So in that case, we're using sort of a performance-based metric as opposed to an indicator to help to alert us that the market is in trouble. In worst case, again, just eyeball the market. Look, we were here, we went down to here, it's like a 13% drop or so, and then look to the left. Look at all this trading up here that you've given up, going way, way, way back to the left. So that in and of itself, looking at that chart, should tell you that we are in trouble. Now, you probably want to party with me, but my favorite moving average is the 30 EMA, especially in more recent times. And you can see in this chart here, well, first of all, we had a lot of green coming into the pandemic slide, right? And then the market began to drop, and it gaps below its 30 EMA, and the highs below the 30 EMA, obviously. And that gives you your first bar of Landry Light. You can see the trend develops to the downside. Now, what's kind of cool here is because the exponential moving average catches up faster to price, even if you said, I'm going to stay short as long as it's red and cover when it turns green, you still would have made about 18% on that slide. But again, especially when you're down here 30-something percent or so, this is where you want to make sure you've lightened up along the way, and then you're in longer-term trend following mode. So right here, again, you can see Landry Light. This is the S&P 500, 30 EMA. Notice that the market tops out, begins to slide a little bit. And you can see down here, there's no Landry Light because the gap, so to speak, between the moving average and price is closed, okay? The lows are no longer greater than the moving average, so there's no Landry Light. And then you can see we begin to turn red and slide. And this was the last slide that we had in the overall market, or the slide that we're in now, I should say. This is how it started. Now, this right here, it did turn green, and I didn't get crazy bullish during this period because, again, I use a lot of tools and a lot of thinking. My analysis, my thinking was this market would rally up just enough to get everyone bullish and then roll back over, and that's known as a bear trap. Now, I did not know that that would actually pan out. If you go in and look at all the presentations that I've done, the weekend charts, the market in the minutes, my trading service archives, and all those links are at the front of this presentation, and I'll show them again at the end. But if you go in and look at all of those things, you'll see that that was my big concern, is that we'd rally just enough to get everyone excited. Now, that didn't mean that I didn't honor my stops and get stopped out of my shorts and started paying attention to the long side. It just meant that I was cautious during that period. And unfortunately, what I feared came true. We rolled back over, and you can see now we have quite a bit of downside Landry Light with a 30-day exponential moving average. Now, I wanted to dust off real quick Bowtie proper order. And uptrend proper order just means the 10 simple is greater than the 20 exponential, and the 20 exponential is greater than the 30 exponential moving average. As a general statement, as long as those are green, meaning that they're in uptrend proper order, you can stay long a market. When they begin to crisscross back and forth, I would become concerned because maybe the market's getting choppy or maybe the market's rolling over. Now, keep in mind, if you're using moving averages, you will have a little bit of lag. That's one of the beautiful things about the Landry Light is, in some cases, there's not any lag because the price will move quickly above or below the moving average as opposed to waiting for those moving averages to cross over. But you can see here we were green even though the market sort of began to roll over. And that's because the market improved back here. The moving averages were catching up to the market. And then when the market rolled back over, there was a little lag in the moving averages, once again catching up to the market. Now, lag is not always a bad thing. Lag could actually stop you from chasing your own tail, getting in and out, in and out, in and out, kind of like the rat hitting the little bar for his cocaine, you know. But that's sometimes a little bit of lag is okay. And there's a little lag that's sort of built in to the TFM 10% system to sort of give the market the benefit of the doubt until and unless certain things happen that would suggest that the market could really be in trouble. So you can see these moving averages begin to cross back and forth again. That's why it turns yellow. And then when they get back to downtrend proper order, you can see that it turns red once again. And that's downtrend proper order, 10 less than 20, less than 30. And somebody's going to ask, I know. So once again, 10 simple, 20 exponential, and 30 exponential moving average. Now this is a weekly chart I was looking at, and this is also a weekly here. And if you really back way up, and you can see, okay, if it's green, let's see what the market's doing. Looking pretty darn good. That was from 1995 to 1999. If I could relive that period, you'd never see my fat butt again, right? It was amazing. But you can see that we didn't have a bear market afterwards when the proper order with the downtrend proper order, followed by a bull market. And then we all know what happened in 2007, 2008. Here's one thing that's kind of fascinating, and I know you probably want to party with me, right? But this bow tie rolled over like right before the market rolled over. And this is on a weekly chart. So that was pretty impressive. And that's where moving averages could really, really help you out, is when a market has a nice gradual rollover. Now, a V-shaped bottom, like the pandemic, the signal was late, but there were other things that warned us that the market might be in trouble. But anyway, proper order to the downside, nice little bear market. We had mostly green for a while during the uptrend from the lows. We turned red, and that was a fairly ugly period if memory serves. I know I probably got stopped out of most of my longs. I probably started shorting a little bit, but then things began to improve. We had a nice leg out of that bear market, and then 2016, late 2015, I remember that as being pretty ugly too, when we had mostly downtrend proper order, and those are some pretty big slides. And if you held through those slides, I think that's bad behavior, and the market's teaching you bad behavior. You could end up getting a lot of trouble. Again, green, nice little leg up. We did have some iffiness in 2019, and that was a pretty big deal. Again, doesn't look like it on this chart, but it was. Of course, the pandemic, but again, as I said a minute ago, it was a little bit late, and I'll zoom in on that in just one second. By the time you got the signal, the bear market was already over because it's a nice little V-shaped recovery. We went back green, and then nice little leg higher, right? And then now we're sort of rolling over, obviously. And if you think, as I saw a bumper sticker the other day, what would Scooby do? Well, ruh-roh, we could be in a little bit of trouble. Now, again, the signal was too late, okay? The market was already long on its way to recovering by the time the bow ties got into downtrend proper order. So just remember that you could get a little late with that. Now, in this recent slide, I don't think they're too late. It just took a little while to roll over. And again, uptrend proper order. We had a nice run post-pandemic, okay? And then you can see, again, we're back to red. And again, this is a weekly chart, and these are weekly moving averages. They're plotted on a daily chart, but then I just flip out to a weekly chart. Now, again, Dave, why do you beat the dead horse so much? Well, because if I don't keep saying things, I have to answer 1,000 questions. So here are the rules, and they're really quite simple. You want to buy when the market is less than 10% away from its 50-week closing high, and the last 2-week lows are greater than the 50-week moving averages. 2 weeks of Landry Light, in other words, 2 weeks of Landry Light on a weekly chart. And the exit is much less stringent. You want to sell first and ask questions later. So you're going to exit when the market is 10% or more away from its 50-week high, and the close is less than its 50-week moving average. Now, we did have, somebody also questioned me on this, didn't we have a buy recently? We did, and I did not take the signal, as I said, last couple of weeks, because you really had to squint your eyes. In fact, I didn't even notice the signal until somebody in my Facebook group pointed it out. And the thing is, it did not fit designers' intent. Go in and watch the last couple of weekend charts where I talked about that in a lot more detail. The system was designed to buy on strength and sell on weakness. And by the time we got the buy signal, the market had already turned down and was weak. And also my thinking, without giving away the entire presentation, was, you know what? Okay, it is a buy. You guys are right. what would happen if I just waited till the market got a little bit higher before I bought, so I'm buying on strength, and then in this case, fortunately, it turned back down before I rushed out and bought the market. And you can see we've been in a pretty serious slide ever since. We closed below the buy line, which is 10% away from the 50-week closing high. And by the way, these are in ACP, and we've been in a pretty serious slide ever since. And this chart's about a week old, but obviously we're a little bit lower than that now. Well, that's my time for this week. As usual, thank you guys and girls for watching. If you need any follow-up information, including the slides, which, as you saw earlier, have a lot of rules and walkthroughs, etc., go to DaveLeonard.com/StockCharts. Again, if you need to reach me, DaveLeonard.com/contact. I want to thank everybody for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.